Good afternoon and welcome to GrainTV. It's March 12th, 2014. To my left is Logan Burgess and I'm Brock Shimbano. Another negative day for soybeans, a mixed trade overall for the grains. Let's take a look at the quotes to see how we ended. Corn was up 5 1/4 cents. Soybeans on the old crop down 25 cents. New crop soybeans off 11 3/4 cents. Wheat in Chicago up 24 cents, and Kansas City wheat was up 18 1/4 cents as well. You know, Logan, we did see another sharp move lower for soybean contracts today. Yep. Is there any reason out there that would push these markets lower?
You know, it seems like a lot of continuation from what we saw on Monday from the USDA. I know yesterday we highlighted the spread between the May and the November contract. Once again today we saw that weaken down 15 cents. That comes on the heels of yesterday's move where it was off about 20 cents. What's really weighing on the old crop soybean market right now is what the USDA reported on Monday, as I said. Ending stocks were revised less than expected, and we didn't see any major revisions for South American exports. So that seems to be weighing on things at the moment. Let's take a look, though, at the new crop November contract. Right now we're getting a lot of calls in the office about kind of the price action that we're seeing on this contract. As you can see from this chart here, this is an hourly chart. Each bar here represents 1 hour worth of price action, and we have a volume indicator at the bottom that shows how many contracts were traded over that hour. The gray line that you see here, this is the trend line that we've been watching since late January, and this is really the trend line that the soybean new crop market has been riding during this kind of bull run that we've seen here over the last 2 months. So as I said on yesterday's show, once we get a strong close below this trend line from a technical aspect, that's going to be a signal that this market may be ready to kind of roll over here and kind of retrace some of the gains that we've seen. If you take a look, though, at this chart, you can see that in today's action we had a strong move below this trend line, but in the last hour of trading we were able to move back higher and close just above it. So I think from a technical aspect this should act as kind of a shot across the bow. This is some of the weaker technical action that we've seen from the new crop soybean contract here really in the last several weeks. So as I said, it should be a shot across the bow. Keep an eye on that 1176 area as kind of a trigger here. If we get a strong close below it, like I said, it might be a good time to look in your local cash market, look at some forward pricing of the upcoming beans.
You know, that was driving what was driving the bean market here today.
Yep.
If we take a step back and talk about the wheat market, we've been paying attention to what's going on in Ukraine here more recently. The USDA actually released a special report as it pertains to the spring plantings there in the Ukraine. If we take a look at what the highlights were here, you can see that the USDA basically said the prospects for the winter crops and the spring sowings are basically in line and they remain generally favorable at this point. A couple days ago we were kind of talking about the rumors of maybe some of the inputs were going to be held back due to the rising tensions there in the Crimea region. Looks like most of the imports will be delivered as they were supposed to. One exception, or a couple exceptions here, might be the hybrid seeds and herbicides might have a little bit of an impact due to unfavorable exchange rate right now. But this is that's outside of what's going on with the military interventions right now in Crimea. So a few highlights there talking about Ukraine. We didn't really see that affect wheat today. Wheat actually marched quite a bit higher, up over 20 cents in Chicago. I think a lot of what was going on there was weather here domestically, and I think we saw some technical buying as well. You know, tomorrow we do get the USDA export sales report out in the morning. Here's a look at take a look at what we are expecting for sales on the old crop. Corn, relatively light sales, 650,000 to 900,000 metric tons. Soybeans backing off substantially on the pace we have seen here recently, 125,000 to 400,000 metric tons, and wheat hanging in there about 350 to 550,000 metric tons. And then, of course, we'll tweet those numbers once they come across the news wires.
Yeah, that's right, Brock. You know, tomorrow's export sales is going to be looked at pretty closely by traders. If we remember back on Monday, we saw some important revisions made by the USDA in terms of their expectations for exports here on the old crop. Corn was raised 25 million bushels, soybeans was up 20. So traders are going to look for confirmation out of tomorrow's report to confirm those moves higher by the USDA. One other thing that's been talked about a lot, specifically in the soybean market, is the negative crush margins in inland China right now. There's been some talk that the Chinese have been trying to resell forward contracted beans from South America. So from a demand standpoint, that has some traders nervous. That could have been helping some of the action that we saw today in the bean market, but that story's been in the bean market here really for most of the week. So I don't think that in particular that was a big driver today. Something to keep on your horizons though, and we'll be talking about that more in detail when tomorrow's export sales report comes out. As always, we'll be here on GrainTV reporting on those export sales. If you have any questions, give us a call at the office, 877-472-4607. And as always, we have a great mobile trading app now available. Visit us at grainhedge.com. You can take a no-obligation trial of it and get some live quotes on your mobile phone or tablet. Have a great day. We'll see you tomorrow.